example, a project requires material procured externally through suppliers. In order to get that, you invite bids from 3 or 4 suppliers and assess their quotations. Based on their quotations, you can get an idea of the costs that will be involved in getting the material for the project. Group decision-making technique is another important technique for project cost estimation. Cost estimation is an exercise which may be carried out by a group or committee in order to gather well-rounded input. Therefore, group decision-making techniques may be used to arrive at a decision that team can work with. The outputs of this process are quite straightforward. Estimates of each of the activities are arrived at. Basis of the estimate includes things like how the estimate was developed, what were the assumptions made in estimating, etc. Project document updates is also one of the outputs because the cost estimates may result in updates to other aspects of the project. For example, quality, risk, time, etc. In the next screen, let us discuss the third process under project cost management: determine budget. Once the estimate of each of the activities is arrived at, the next project cost management process is to determine budget. It is the process of aggregating the estimated costs of individual activities or work packages to establish an authorized cost baseline. This is where the control account concept comes into picture. The estimated costs of the activities are aggregated to arrive at the cost budget at the control account level. Once approved, this cost budget becomes the cost baseline of the project. Project cost performance is measured against the cost baseline, that is, how much more would the project cost be compared to the original cost baseline. The cost baseline includes all authorized budgets, but excludes management reserves. The inputs used in determining the project budget are the activity cost estimates and the basis of estimates, which are the output of the previous cost management process. The cost management plan lays the framework for the cost management processes in the project. It provides guidelines such as the budgeting cycle, tools and techniques used to prepare and approve the budget, etc. In addition to these two important inputs, scope baseline is also looked at. Project schedule provides aggregate cost in a particular calendar period to ensure how much money can be made available during that time. Similarly, resource calendar provides information on the resource, which is assigned to the project at a particular point of time. This information is then used to indicate resource costs over the duration of the project. Risk register gives an understanding of the overall level of risk on the project and, therefore, the level of contingency reserves that need to be built into the budget. Agreements entered into with the suppliers are also required to finalize the budget. Again, organizational process asset is an input because organization may have few policies for reporting the cost budget, or there might be some cost budgeting tools being used. There are various tools and techniques used in determining budgets. Cost aggregation technique involves adding up the cost and aggregating them at the control account level, so that the cost can be managed in a better way. In reserve analysis, once the costs are estimated, some extra amount is added to the estimate as a management reserve to take care of any unplanned activities. Expert judgment is a technique in which an expert's help is sought to estimate the activity cost. Expert is someone who might have worked on a similar project in the past and has a good idea to estimate the activity cost involved. Historical relationships are used to predict the total project cost using mathematical model. This is similar to analogous estimate or parametric estimate method. Funding limit reconciliation technique is used to ensure that cost on the project is budgeted or spent as per the availability of the fund. For example, if the project can get the funding of only $50,000 a month, the project budget should be planned accordingly. The output of this process is the cost baseline. This is an authorized project budget over a period. This is used to measure, monitor, and control overall cost performance of the project. In addition to this, the project funding requirements are also arrived at. Funding requirements means how much fund the project requires monthly, quarterly, or yearly for the execution. The last output of this process is project document updates. An understanding of determining budget may be useful when answering questions in the PMP exam, so make a note of the inputs, tools, and techniques and outputs of determining budget. In the next screen, let us discuss the last process of project cost management, that is, control cost. Control costs is the process of monitoring the status of the project to update the project budget and managing changes to the cost baseline. Updating the budget involves recording actual costs spent until date. Any increase to the authorized budget can only be approved through the Perform Integrated Change Control process. Some of the typical activities that happen as part of the control cost process are ensuring that cost expenditure does not exceed the authorized funding, monitor the cost performance to understand variance, and monitoring the work performance against the funds expended. The inputs to the process are project management plan, organizational process assets, project funding requirements, and work performance data. Work performance data contains the information about the project progress. The important tools and techniques used in controlling costs are Earned Value Analysis Management, Forecasting, to Complete Performance Index. Other important aspects of controlling costs are the Review the Performance, Analyze the Reserves to make sure the project has enough budgetary reserves to meet the expenses, and Project Management Software, which helps in tracking and managing costs. Now, let us look at the output of this process. The key outputs of this process are work performance information in terms of cost variance, CV, schedule variance, SV, and earned value, EV, and forecasts about the cost performance. This process may also result in change requests arising out of cost control measures, as well as updates to project documents, the project management plan, and organizational process assets. Business scenario-based questions on project cost control can be expected in the exam, so if you have questions on these concepts, get them cleared, as that will help you score higher. In the next screen, let us learn about Earned Value Management and its related terms. Earned Value Technique is an excellent way to track the project progress against the project plan. It is a method of measuring the project performance objectively and comparing it against the project baseline. Results from an earned value analysis indicate deviation of the project from cost and schedule baselines. Baseline is the initial approved value along with approved changes. Therefore, schedule baseline is the first approved project schedule along with approved changes. There are various terms used in earned value technique. Planned value is the authorized budget assigned to the scheduled work. Earned value is the work performed in terms of budget authorized for that work. Actual cost is the cost incurred in work performed. Budget at completion is the budgeted amount for the total work. Estimate at completion is the expected total cost for the project. Estimate to complete is the expected cost to finish all the remaining project work. Variance at completion is the projected budget surplus or deficit at the end of the project. All the parameters displayed on the screen are measured in terms of cost. You may come across business scenario-based questions on earned value management in the PMP exam, so ensure that you develop a clear understanding of this topic. Let us look at an example of a planned value in the next screen. Planned value is the estimated value of the work planned. This value is measured in terms of currency, say dollar. If the planned value is $340, then the work planned is worth $340. How do you calculate earned value? The solution is add the budget allocated to each of the activities that have been completed at the point of time. The resulting value is the earned value. In the next screen, let us look at the formula used to calculate earned value. In cost variance, negative means the project is over budget. Positive means the project is under budget. Similarly, in schedule variance, negative means the project is behind schedule, whereas positive means the project is ahead of schedule. The value of the next two parameters, Cost Performance Index, CPI, and Schedule Performance Index, SPI, values vary between 0 and 1. For example, a CPI of 0.8 implies that 80 cents of work is obtained for every dollar spent in the project. Similarly, if SPI is 0.9, it implies that project is progressing at only 90% of the speed originally planned. The next parameter is Estimate at Completion, or EAC. There are different ways of calculating the EAC value. The method used depends on how the cost and schedule variances are expected to play for the rest of the project. BAC by CPI is used if you expect that the current cost performance will continue until the end of the project. AC plus BAC minus EV is used if you expect that the rest of the project will be managed at the budgeted rate. AC plus BAC minus EV by the product of CPI and SPI is used if you want to factor in the impact of the cost as well as schedule variances. AC plus ETC is used if you want to re-evaluate the project based on a forecast value for the estimated cost of the remainder of the project. The next parameter is Estimate to Complete, or ETC, which is the cost of project from this point to the end. This is calculated by subtracting the actual cost from the estimate at completion. In addition, variance at completion can be calculated by subtracting the estimate at completion from the budget at completion. Variance at completion is the cost estimation whether it is over or under budget. Another parameter is the To Complete Performance Index, or TCPI. This is the cost performance needed to achieve a desired outcome. For example, if the project needs to be managed to the original budget, BAC, then TCPI, that is, the CPI that must be maintained for the rest of the project, is calculated as BAC minus EV by BAC minus AC. Similarly, if it has to be managed within a revised target, say EAC, then TCPI is calculated as BAC minus EV by EAC minus AC. Before the start of the PMP exam, please make a note of the formulas of earned value technique. In the next screen, let us look into a business scenario to understand this concept better. After reading the problem statement, click the Solution button to look at a possible answer. Let us take the example of a software development project. There are 4 phases, and each phase takes a month to complete and is expected to cost $10,000. The phases are planned to be completed one after the other. The status of the project at the end of the month 3 is summarized in the table. Requirements definition is completed and actual spending on this is $10,000. Architecture and design is done and actual spending on this is $12,000. Development and unit testing is only 50% done, though it was supposed to be completed by 3rd month. It has cost $9,000 until date. System testing and go live has not yet started. Note, S indicates start time, F indicates finish time, and PF indicates that it is partly finished at the end of the month. Based on the above information, calculate the CV, SV, CPI, and SPI of the project. Let us look at a solution in the next screen. Before we end this lesson, let us also look at a few definitions that might be useful for your PMP examination. Law of diminishing return. This means the more you put into something, the less you get out of it. For example, doubling the number of resources working on a project will not necessarily have the time. Working capital. The amount of money the company has to invest on the project and the day-to-day company operations. Funding limit reconciliation. The process of comparing the planned expenditure in a given period with the available funding for that period. Large assets purchased by the company lose value over time. This is called depreciation. There are 2 forms of depreciation, straight line and accelerated. Same amount of depreciation is taken every year. For instance,
A car with a price tag of $10,000 and useful life of 10 years is depreciated $1,000 per year. At the end of the 10th year, the value of the car is considered zero for all accounting purposes. Accelerated depreciation depreciates faster than the straight-line depreciation. For instance, a car with a price tag of $10,000 depreciates $3,000 the first year, $1,500 the next year, $1,000 the third year, and so on. Let us now check your understanding of the topics covered in this lesson.
Here is a quick recap of what was covered in this lesson. Project cost management includes the processes involved in estimating, budgeting, and controlling costs so that the project can be completed within the approved budget. Cost management plan contains details on how to plan, manage, and control the project cost in relation to the cost baseline and manage the cost variances. Cost estimate is an educated guess of how much an activity or project will cost. Budget considers the cost estimate and accordingly sets aside funds for the completion of the project. Under control account technique, related activities are clubbed and their costs are managed as one unit. The 4 project cost management processes are plan cost management, estimate costs, determine budget, control costs. Earned value management technique indicates potential deviation of the project from the cost and/or schedule baselines. In this lesson, we will focus on project quality management. Let us begin with the objectives of this lesson. After completing this lesson, you will be able to define quality and quality management, differentiate between quality planning, quality assurance, and quality control. Explain cost of quality and its categories. Describe the project quality management processes. Explain the 7 basic tools of quality. Explain Six Sigma. In the next screen, let us take a quick look at the project management process map. There are 47 processes in project management, grouped into 10 knowledge areas and mapped to 5 process groups. In this lesson, we will look at the 5th knowledge area, that is, project quality management and its processes. In the next screen, let us understand what quality is. The project manager is responsible for quality in a project. However, it is also the responsibility of each and every one in the project to ensure that whatever they do meets project quality expectations. Quality is defined as the degree to which a set of inherent characteristics fulfills requirements. A project is said to meet quality expectations when all the project requirements agreed in the beginning of the project are met and the resulting product is usable. Usable means that the intended users can use the product without any problem. In the next screen, let us look at some quality-related terms. It is important to discuss a few terms to understand the concept of quality better. Customer satisfaction is defined as conformance to requirements and fitness for use. It is important to understand the subtle distinction between quality and grade. Grade is a classification based on technical characteristics. Low quality is always a problem, but low grade may not be a problem. Rather, it would be a matter of choice. Similarly, it is important to understand the distinction between precision and accuracy. Precision is the granularity of measurement. That is, how fine-grained can you measure the outcome. Accuracy is how correct you are. That is, how close you are to the desired value. In the next screen, let us understand the concept of optimal level of quality. Quality comes at a cost. More effort put in quality will give better results. However, you cannot keep on investing on increasing the quality, as there is no limit to how much a product can be improved. Investment in quality is determined by knowing the optimal level of quality. Optimal level of quality, as shown in the diagram, is said to be achieved at the point where the incremental revenue from improvement equals the incremental cost to secure it. Suppose you are the manufacturer of toys, but the toys are below quality and the sales are low. To improve the quality, you invest in identifying the demands of children, sharing few samples, and recording their feedbacks. Once all these are captured and implemented in the products, you lure the parents to buy them. As the investment is increased to manufacture good quality toys, the cost will therefore increase, and it might become prohibitive for parents to buy. Optimal level of quality is reached at a point where you get maximum number of buyers for the toys manufactured. Now that we are clear on the concept of quality, in the next screen, let us discuss quality management. Quality management involves performing activities like creating standard policies and procedures, and ensuring that those standard procedures are being followed properly in the project. It aims to ensure that project meets all the initial agreed requirements without any deviation, and that the specified approach to quality is implemented on the project. 3 broad activities are done as part of quality management. They are quality planning, quality assurance, and quality control. Quality planning is the first step when quality-related activities of the project are planned. Quality assurance is the next stage of implementing those quality plans, and quality control is the last stage when periodic checks are done to see if project quality is improving. In the next screen, let us look into the differences between the 3 aspects of quality management. It is important to understand the different kinds of activities that come under quality planning, quality assurance, and quality control. Once the quality planning is done, the quality management plan is ready. This quality management plan has standards, templates, policies, and procedures to be followed in the project. It contains information on the level of quality being aimed and the plan to achieve that level. It is the aim of quality assurance activities to ensure that the activities planned under quality planning phase gets executed for the project. It is the task of quality assurance to determine if the project is complying with the organizational as well as project policies and procedures. This is ensured by conducting regular process audits to identify deviation from what is planned in the quality management plan. These audits are generally done by quality department of the organizations. Quality assurance focuses on the process, not on specific products. The role of quality control is to measure specific project data or results against standards to inspect and verify the project's product, defect repair, and measure whether quality indicators are improving. Quality control is about the product and data. For example, it was planned as part of quality management that project would get completed plus or minus 10% within the cost budget. 3 months back, when the measurement was done, project was over budget by 20%. When the measurement was done a day before, it was only 15% over budget. Therefore, the project has showed an improvement of 5% in the last 3 months, and it is quite likely that over the next 3 months, project may get within the planned limit of 10%. Instead of showing improvement, if the data shows cost increase, then corrective and preventative actions are required to get the project within the 10% limit. This is quality control. In the next screen, let us discuss a few quality management concepts. Let us look at some terms that are commonly used in quality management parlance. Total Quality Management, or TQM, is a quality management philosophy that involves holistic thinking about meeting the objectives of an organization. It places the responsibility of quality squarely on the management. Kaizen is a Japanese term that stands for change for better. Kaizen philosophy is one that should always be looking for small and continuous improvements in the process. Deming cycle, or PDCA cycle, that is, Plan, Do, Check, Act, is a process control and improvement approach propagated by the famous quality guru Edward Deming. It means you plan for something, execute it, check the output, and based on the lessons you act to bring the deviations under control. Kanban is a pull-based management system that originated in Japan, based on just-in-time (JIT) inventory management. The idea behind Kanban is to minimize the work in progress and achieve a smooth flow in the process from start to finish. Because building up inventory only to paper over the imperfections in the system tends to hide the problems. In the next screen, let us focus on cost of quality. Cost of quality is the cost that needs to be incurred to make a quality product. The sum of all the costs incurred is ensuring that project conforms to requirement is cost of quality. Cost of quality can be broken down into two major categories. First is the cost of conformance, or the money spent during the project to avoid failures. This can further be subdivided into prevention costs, which is the cost to prevent errors, like training the team, creating documents, on equipment, and in time to do it right. The other subdivision is appraisal costs, or the cost for assessing quality, like testing, destructive testing loss, and inspections. The second category is the cost of nonconformance. It is the money spent during and after the project because of failures. This is subdivided into internal failure costs. It is the cost of failures that occur before the product is released to customers, for example, rework and scrap. The second subdivision is external failure costs. It is cost incurred on failures that occur after it has been released by the team, for example, liabilities, warranty work, and lost business. Concept-based questions on cost of quality can be expected in the exam, so please make a note of the categories of cost of quality. Let us look at the project quality management processes in the next screen. There are 3 project quality management processes, of which the first process, Plan Quality Management, is done as part of the planning process group. The next process, Perform Quality Assurance, is done as part of the executing process group, and the last process, Control Quality, is done as part of the monitoring and controlling process group. In the next 3 screens, let us look into each of these processes in detail. The aim of the Plan Quality Management process is to identify the relevant requirements or standards to execute the project effectively to achieve the desired quality level. Quality planning results in the creation of the Quality Management Plan. Aim of the Plan Quality process is to identify the standards. A standard is an agreed-upon process to work or achieve a result. A standard can be set from within the organization or government. Once all the standards for the project are identified, the aim of the quality planning activities involves determining what work needs to be done to meet those standards. Before adhering to the standards, you should question their relevance with the project. Implementing all possible standards applicable to the project in random will have cost and time implications. Let us look at the inputs to this process. The Project Management Plan provides the scope, schedule, and cost baseline, all of which have an implication on the Quality Management Plan. Quality Plan has a direct correlation with these. It might also have an impact on and be impacted by other subsidiary management plans, such as risk management. The stakeholders of the project may have specific requirements and views about the quality parameters of the project, and these have to be considered. The risk register gives an indication about the kind of risks that are inherent in the project, and also those which must be considered while planning the activities to ensure quality. The requirements for the project need to be considered for planning quality-related activities, because quality is all about meeting the requirements. In addition to these, enterprise environmental factors and organization process assets are also listed as inputs, because the standards can be either from within the organization or from government or other external bodies. Standards from within the organizations are usually the best practices learned over a period while executing numerous projects. An example of government standards can be standards to control air pollution by the motor vehicles, which vehicle manufacturers must adhere to. To accomplish quality planning, first, analyze the benefits versus the costs of meeting quality requirements. Next, identify the cost of quality and confirm if that kind of investment in quality is justified. In addition to these two, benchmarking helps in analyzing the quality of activities of similar projects executed in the past. This helps in identifying the particular quality of output of the previous project, which in turn acts as a basis for the current project's quality planning. Design of experiments can also be used for quality planning. This is a statistical way to determine what variables will improve quality the most. For example, in case of manufacturing doors, it can be determined that increasing the quality of the wood can have maximum impact on improving the quality of the door. In addition, the 7 basic quality tools, also known as the 7QC tools, are used to determine the plan to achieve the desired level of quality. Statistical sampling as a tool becomes relevant whenever the quality plan cannot be applied to all the artifacts produced. For example, if destructive testing is a requirement, then it can be carried out only on a sample, not on the entire population. Statistical sampling helps in arriving at a representative sample that can give useful information. Other additional tools, such as brainstorming, force field analysis, etc., may be used to determine the quality management plan for the project. Conducting regular meetings is another important tool. The quality management plan has to be determined in a collaborative manner by consulting the team members and other stakeholders. Quality management plan is a key output of this process. Checklist is a list of items to inspect. For example, many of the office buildings have housekeeping checklists to ensure that all floors, cabins, etc. are cleaned. Checklists are created during quality planning and used in quality control. Metrics are project-specific data that need to be measured to check the status of the project. The simplest project metrics can be cost and schedule. Metrics are also decided during quality planning and used in quality control. One of the roles of the project manager is to not only manage the project, but also improve processes in the project to decrease the instances of defects, which in turn saves time and money. Such activities are listed in the Process Improvement Plan, which eventually becomes part of Project Management Plan. As a result of the planning activities, other project documents may also get updated. For example, the Quality Management Plan may result in updates to the cost or resource requirements. There may be questions in the PMP exam based on the Plan Quality Management process, so please ensure you have a fair understanding of the concept before you take the exam. In the next screen, let us discuss the second quality management process. Once the quality planning is over, the next process in project quality management is quality assurance, which involves determining whether the standards are being met and the processes are being followed. Therefore, the input for this process is the work that has been completed during the quality planning stage. They are project documents, quality management plan, process improvement plan, quality metrics, and quality control measurements. Let us look at the tools and techniques used in this process. Quality audit is the process to check whether the project is complying with the organization policies, standards, and procedures, and determine whether these policies, standards, and procedures used are efficient and effective. So a good audit not only looks at this compliance, but also for the new lessons learned from the current project that can help make the future projects better. Process analysis involves using the lessons learned from doing the initial few work to make the remaining work more efficient. For example, if the project involves installing a software package, then the lesson learned from the first few installations can be used to improve the process on remaining installations. Apart from these, all the quality management and control tools, such as the 7 basic quality tools, will be relevant to this process. The key output of this process is project documents updates to ensure that if there is any deviation from agreed standards, it is corrected. Also, if there are any lessons learned that can help improve the future projects, the organization process assets get updated. This quality assurance may result in improvement suggestions, change requests may be generated, and the project management plan may need to be updated. Understanding characteristics of quality assurance tools and techniques may be useful while answering the exam, so prepare this topic well before you take the exam. In the next screen, let us discuss the last process of quality management. The key focus of the quality control activities is on the correctness of the work. Quality control helps answer questions like, is everything okay with the project? Does the project plan require changes to successfully execute the project? Will the project succeed, etc.? Let us look at the inputs to this process. The quality metrics measurements are done continuously to see whether the project quality is improving. The project deliverables are inspected against the planned checklists. Quality control acts upon the deliverables and work performance data produced in execution. It also refers to the project management plan for understanding deviations from the plan. It also considers the approved change requests, information from other project documents, and organizational process assets. There are 7 popular tools and techniques used in doing the quality control activities. They are collectively known as 7 basic tools of quality. Other relevant tools are statistical sampling, inspection or testing, and review of the approved changes. Quality control activities result in quality control measurements, the verified deliverables, validated changes, information about the work being performed, recommended changes, and updates to the organizational process assets, project management plan, and other project documents. In the next screen, let us look into a business scenario to understand this concept better. After reading the problem statement, click the Solution button to look at a possible answer. Six Sigma is a highly disciplined process that focuses on developing and delivering near-perfect products and services consistently. If a large volume of data is plotted over a period of time, you would most probably have a bell-shaped graph. Such graphs are also called normal distribution graph. It's called as normal distribution because any large volume of data is plotted with the intent to track variations would most probably be in a bell-shaped curve. The line corresponding to the top of the bell curve is the median of the data sample. Standard deviation concept is used to measure how far any data is from the mean. Standard deviation is also called sigma. One standard deviation from the mean covers 68% of the data. 6 sigma means 6 standard deviations from the mean. This would cover 99.99966% of the data. We will look at an example of 6 sigma in the following screen. To understand 6 sigma, let us look at an example. A tire manufacturing company produces 100,000 tires a day. It is not possible to verify each and every tire manually to ensure it is defect-free. Instead, random sample of these manufactured tires are taken and checked for defects. Assuming that the thickness of the tires is a parameter to measure defect, any tire that has a thickness more than or less than 10 millimeters is considered to be defective. Now, if you measure the actual thickness of all 100,000 tires manufactured daily and plot them on a graph, you get normal distribution graph. One standard deviation from the mean covers 68% of the data, meaning if the thickness of the 100,000 tires are plotted, 68,000 of them lie within one standard deviation above or below the mean. Now, if a company operates at 6 sigma level, they would ensure that all tires that are up to 6 standard deviations from the mean are defect-free. Therefore, in such cases, you can expect only 3 defective tires out of 1,000,000 tires manufactured. Let us now check your understanding of the topics covered in this lesson. Here is a quick recap of what was covered in this lesson. A project is said to meet quality expectations when all the project requirements agreed in the beginning of the project are met and the resulting product is usable. Quality management includes creating and following policies and procedures that meet the project's defined quality needs. Quality planning defines the standards, templates, policies, and procedures. Quality assurance determines if the project is complying with the policies and procedures. Quality control measures specific project results against standards. Plan quality management, perform quality assurance, and control quality are the three project quality management processes. 7 basic quality tools are used to plan and achieve the desired levels of quality. At Six Sigma level, there would be only 3 defects out of 1 million units manufactured. In this lesson, we will focus on project management framework. Let us begin with the objectives of this lesson. After completing this lesson, you will be able to define project, project management, program management, and portfolio management. Recognize the roles of Project Management Office. Identify the project constraints and their impact on the project. Explain the role of a project manager in stakeholder management. Describe different organization structure. Differentiate between a project life cycle and a product life cycle. Let us begin this lesson with understanding what a project is in the next screen. A project is a temporary endeavor undertaken to create a unique product, service, or result. For example, developing a new product, service, or result, constructing a building, industrial plant, or infrastructure, and implementing, improving, or enhancing existing business processes and procedures. In the next screen, we will focus on the characteristics of a project. A project can be distinguished based on its characteristics. The definition describes 2 characteristics of a project. First, it is temporary in nature. Temporary here does not mean short in duration. A project can extend for long duration based on the requirements. For example, creating a new indigenous missile defense system for a country. However, there is always a definite planned start and end date for a project. It cannot go on indefinitely. Secondly, the project is supposed to produce a unique output. The output could be a product, service, or result. There can be many common activities between 2 projects, but the outcome of each project should be unique in some way or the other. Now, let us look at what marks the end of a project. A project ends when either the objectives are met or the project is terminated because the objectives will not or cannot be met. The other reason to terminate the project can be that the need for the output of the project does not exist anymore. Usually, the sponsor of the project takes a call about the closure of the project. It is important to differentiate project work from regular operational work. For example, your office receptionist does the same work every day of picking any incoming call and directing the call to the right person in the office. This is an ongoing repetitive work and can be classified as operation. Operations, unlike projects, are neither temporary nor unique. Creating a new software system to effectively track your customer complaint can be an example of a project. When the software is successfully developed, the project objective is met, which marks the end of the project. When you start using this software to track customer complaints, you are entering into the operations phase. In the next screen, let us now look into project management. As defined in the PMBOK guide, project management is the application of knowledge, skills, and tools and techniques applied to project activities to meet the project requirements. Project management is achieved by proper application and integration of the 47 processes. Project application and integration means these processes should be executed in the right manner as well as in the right order. In the next screen, let us discuss how to manage a project. Program management is defined as the application of knowledge, skills, tools, and techniques to a program to meet the program requirements and to obtain benefits and control not available by managing projects individually. As defined in PMBOK Guide, a program is a group of related projects, which when managed as a group in a coordinated fashion, provides benefits and control that are not available while managing them individually. These benefits could be from decreased risk, economies of scale, improved management of dependencies, delivery of additional capabilities, optimal utilization of shared resources, and so on. Let us now learn the various features of program management. Random projects cannot be grouped together as a program. The projects in a program should be related in some way or the other, and there should be some value added in managing them together. A project may not be a part of any program, but a program will always have projects. A project can also be executed as a standalone project. A program is designed to deliver some strategic benefits value to the organization. These benefits can be tangible or intangible. Examples of tangible benefit could be increased profit margins or operational cost savings. Examples of intangible benefits could be improved team morale or building up certain competencies. While a project manager focuses relentlessly on the fulfillment of the project's requirements, that is, scope, cost, time, quality, a program manager needs to focus on ensuring that the organizational benefits are realized. In the next screen, let us understand what a portfolio is. Portfolio is yet another term used along with project and program. A portfolio may have multiple projects and programs that are managed as a group to achieve strategic objectives. Note that all projects and programs in a portfolio may not be necessarily interdependent or directly related. A portfolio can be created based on the business objectives. For example, an IT service company can have a portfolio named Japanese Projects, which is formed with an aim to take over the Japanese market by giving more attention to these projects. Within this portfolio, similar projects can be managed as a program, and all banking projects from Japan can be managed as a banking program. In the next screen, let us discuss portfolio management. Portfolio management is the centralized management of one or more portfolios. This includes identifying, prioritizing, authorizing, managing, and controlling projects, programs, and other related work to achieve strategic business objectives. Therefore, whether the company should have Japanese projects as portfolio or not is decided by portfolio management. In the next screen, let us understand the relationship between portfolios, programs, and projects. The image on the screen will help you to understand the terms portfolios, programs, and projects. A portfolio is part of an organization's overall strategy. It represents a conscious decision by an organization to invest in the portfolio. The overall objectives of a portfolio are then cascaded down to the lower-level components. The components could be sub-portfolios, programs, or projects. These components can further be broken down into smaller components for ease of management. Although a project may not contain operations, a program, or a portfolio, it can include other work. This other work may comprise training and development, customer support and services, etc. If the other work has synergy with the overall objectives and adds to the capability to deliver the higher-level benefits, then it can be included in the program or portfolio as well. In the next screen, we will discuss Project Management Office. Project Management Office, or PMO, is a specific type of body or department within an organization. PMO performs several roles in the organization, and these can broadly be classified as primary roles and other roles. Typically, the PMO may take up any one or a combination of the three primary roles. It provides the policies, methodologies, and tools and templates for managing projects within the organization. It provides support and training in organization on how to manage projects. And finally, it provides project managers for different ongoing projects in the organization. PMO may also help in managing interdependencies between the projects, selecting, managing, and deploying shared or dedicated project resources, if need be, terminating a project, and organizing lessons learnt sessions and maintaining the project management knowledge base for an organization. In the next screen, we will discuss how to manage the triple constraints. Any project can be done successfully if there is no constraint on time or there is unlimited budget available. Unfortunately, that is not true in real life. A project is performed within some constraint, and these constraints are usually competing. Therefore, if you change one, it would affect the other. For example, if the project duration increases, it would lead to increase in the project cost as well. Triple constraint is a term that originally referred to the three competing project constraints within which the projects are performed. These constraints are cost, time, and scope. Quality is a primary concern for a project manager. Therefore, the project manager has to make trade-offs to keep the scope, cost, time, quality plane in balance. To achieve the balance, the project manager also needs to manage other aspects of the project. For instance, the people, stakeholders, risks, communication, and procurements. The project manager plays the essential role of integrating all these different aspects of project management. In the PMP examination, you can expect business scenario-based questions focusing on the triple constraints. In the next screen, let us understand who a stakeholder is. A stakeholder can be defined as the one whose interests may positively or negatively be affected or perceived to be affected by the decision, activity, or outcome of the project. As per the definition, the project team, project manager, project sponsor, PMO office, customer, etc. are the stakeholders of the project. A project sponsor is the one who gives a go-ahead for a project and provides the necessary resources to execute the project. Therefore, the head of projects in the organization who provides a green signal to start a project and allocates required resources to the project is the project sponsor. A project sponsor is usually somebody placed high up in the organizational hierarchy of the performing organization, that is, the organization in which the work of the project is being carried out. In the next screen, let us look at stakeholder management. One of the key responsibilities of a project manager is to manage stakeholders. A project manager has to involve the stakeholders from the beginning of the project until the end, so they are aware of every step. A project manager has to take up specific activities for stakeholder management, identifying both internal and external stakeholders. Missing out any stakeholder can be disastrous for a project. A stakeholder who is identified towards the end of the project may come up with his own requirement at that stage, and incorporating them can be risky. Determining stakeholder requirements. After identifying all the stakeholders, the project manager also needs to ensure that their requirements are clearly identified. Sometimes, stakeholders might themselves not know of their requirement, and it is the job of the project manager to get them right by doing a proper stakeholder requirement analysis. Determining stakeholder expectations. Stakeholders might also have some unstated expectations, which need to be clarified to see if it can become a project requirement. It is again the role of the project manager to determine the stakeholder's expectation. Communicating with stakeholders. Once all the stated and unstated stakeholder requirements are known, the project manager, as part of stakeholder analysis, should focus on communicating them regularly to keep stakeholders involved in the project. Once you understand the practices of stakeholder management, it will be easier for you to answer scenario-based questions in the examination. In the next screen, let us look at the various organization structure. Projects are performed in an organization, and the functioning of the organization might affect the project. The different organization structure types explained here are based on the level of authority that a project manager gets into in those organizations. In a functional type of organization, the organization is grouped by the area of specialization within different functional areas. For instance, marketing, accounting, engineering, etc. are departments within the organization. Each employee typically reports to a functional manager. In such types of organization, normally projects are undertaken within the department itself. If a project requires any assistance from another department, the request moves from the head of the requesting department to the head of the concerned department. The team members do their normal departmental work in addition to the project work. The next type of organization is projectized organization. In such organizations, there are no departments. The organization's resources mostly work on projects. Team members report to a project manager. The project manager has complete control over the resources. When the project is completed, either they move on to another project or they look for some job outside the company. They do not have a department for themselves. The third type of organization is a matrix organization, which is a blend of functional and projectized organizational structure. A team member belongs to a department as well as they are part of a project team. In such organization, team members have two bosses. One, their department head, and the second, their project manager. Since there are two bosses here, this type of organization is further classified into three different types. They are weak, strong, and balanced matrix organization. So out of the two bosses that team members have in matrix organization, if the project manager has more authority over the team member, such organizations are called strong matrix. Where the functional manager has more authority, it's a weak matrix organization. If they both share equal authority, then it is a balanced organization. There is another term that you might find in the exam called tight matrix. This generally refers to a co-located team, that is, a team that has been placed in the same location to enhance their performance. In the PMP exam, if there is no mention of the organization type, you can assume it to be a matrix organization. Let us look at each of these organization structures in detail. In the next screen, let us look at functional organization. In a functional organization, the resources of the organization are grouped by functions, sometimes called departments. Examples of functions could be sales, finance, administration, manufacturing, etc. Each function plays a definite role in the organization and is headed by a functional head or supervisor. All the resources in such an organization report directly into their functions. Therefore, a salesperson would report into the sales organizational hierarchy, a purchase executive would report into procurement, and so on. You would notice that in a functional organization, the project manager's role is not explicitly called out. When a functional organization embarks on a project, each of the functions that are involved may volunteer some resources to work on the project. One of these resources may end up playing the project manager's role. The resource assignments may not even be full-time, and sometimes even the project manager is part-time. Since the project manager has no authority over any of the resources, they are dependent on the functional heads. This makes it more challenging for the project manager to coordinate in the team. However, functional organizations provide an opportunity for specialization. For example, if a purchase executive was reporting into the purchase department, that executive would have exposure to all the purchasing that happens within the organization and has a well-defined career path. In functional organizations, project management happens at the functional head level. Next, let us look at the projectized organization in the next screen. The projectized organization has all the resources aligned around projects. The project managers have complete control over the resources working on their projects. The biggest advantage of the projectized organization is that the resources have loyalty to their projects and project execution becomes easier. This kind of structure is suitable for organizations whose work is in the nature of projects. There are few disadvantages in this structure as well. Firstly, the role of the resource is over once the project is completed. Secondly, highly specialized roles within a project may not be fully occupied all the time. For example, a purchase executive may have work for selected periods on a project while purchase activities are going on. However, for the rest of the period, their capability may not be optimally utilized. There is less scope for functional specialization as the project boundaries limit the kind of work for the resources. Each project manager is in charge of a project and its resources. Next, let us look at the matrix organization. In a matrix organization, the resources report to the functional managers and are managed by the project managers as well. There might even be a function that represents all the project managers in the organization, which provides project management expertise. The matrix structure has three variants, commonly referred to as weak, balanced, and strong. In a weak matrix, the authority of the project manager is the weakest and strongest in a strong matrix structure. The titles given to project managers in functional or weak matrix organizations are project expediter or project coordinator. They would be called project managers in a balanced or strong matrix structure and have slightly more authority over the time of the team members. The advantage of the matrix structure is that resources can be optimally utilized while preserving the capacity of the project managers to get projects executed efficiently. Resources can specialize in their functions and have stability in their careers, also contribute to the projects at the same time potentially. The disadvantage of matrix organization is that the communication overhead increases significantly. This is because every resource in the organization belongs into a project and into a function, leading to a dual reporting structure. In a matrix organization, project management happens at project resource level. In the next screen, let us summarize the advantages and disadvantages of different organizational structures. Each organization structure has its own set of advantages and disadvantages. The advantage of functional organizations is that resources may find clearly defined career paths and achieve specialization and skill development in their respective fields. It will be a flexible workforce since only one manager will be responsible, avoiding confusion. The disadvantage of such organization type is that project work is hampered. Department work is always given higher priority than the project work. In addition, there is no career path in project management, which leads to lower interest in projects. In the case of the projectized organization, one of the clear advantages is better communication within the projects. Since project work is the only work team members are doing, it also leads to loyalty towards the project goals. The disadvantage of such organization type is the inefficient use of resources, because every project team has their own support function. Therefore, this might lead to the duplication of effort. It also leads to the resources being left with no work, since their roles are over once the project is completed. It also hampers skill development, because the project requirements dictate what kind of work team members perform at different stages on a project. Now, let us look at the matrix organization. It also has the advantage of better coordination and maximum utilization of resources. However, the disadvantage is the higher potential for conflict among the managers, which might lead to communication complexity and overhead management. In the next screen, let us focus on the comparison on project lifecycle and product lifecycle.
Project lifecycle spans the initiation of a project until the closure of the project. The product lifecycle, on the other hand, also encompasses the operational and maintenance phases. A typical product lifecycle starts with conception of the product and goes until its withdrawal from the market. The withdrawal might be because it becomes obsolete, or there is no further need for the product in the market. A product has a long life cycle. A product can require or spawn many projects over its life. For example, a project in product conception phase could be to determine customer needs, whereas a project during product maturity phase could be used to perform competitive analysis. Typically, a product lifecycle is longer than the project lifecycle. A project also has its own life cycle, and this life cycle depends upon the industry and the organization within which the project is being executed. Sometimes different organizations within the same industry use different life cycles. There can be questions in the exam based on the comparison of project life cycle and product life cycle, so understanding the differences will be useful in answering such questions. In the next screen, let us discuss more on project life cycle.
A life cycle is composed of phases. Each phase represents a discrete unit of work required to be done on the project. There are different ways of classifying project life cycles. Let us first discuss the sequential versus overlapping life cycle. In sequential phases, the subsequent phase starts only after the previous phase has been completed, whereas in overlapping phases, two or more phases may run in parallel for some time. This could help fast-tracking and compressing the amount of time required. The other way of classifying life cycles is how they go about the process of planning. In predictive life cycles, there is a large upfront planning phase where all the details of scope, cost, time are planned before beginning the subsequent phases. These phases then are executed in either sequential or overlapping modes. They are suitable for large projects where all the requirements are likely to be known in advance and where upfront planning effort is required to get the necessary approvals. Another feature of predictive life cycles is that each phase may potentially be different in the nature of activities and may require people with different skill sets. For example, traditional software development life cycle has phases like requirements, feasibility, planning, design, construction, testing, and transition. We will continue project life cycles in the next screen. Incremental and iterative life cycles have a short upfront high-level definition and planning phase. The product is then developed through a series of iterations, where iteration increments or adds to the functionality by a little. All the activities are intentionally repeated in iterations. Adaptive or agile life cycles are variants of incremental and iterative life cycles where iteration is very short, typically 2 to 4 weeks. Agile methodologies are becoming very popular in the software development industry and in other industries where the requirements are highly changeable and frequent feedback is beneficial. Let us now check your understanding of the topics covered in this lesson. Here is a quick recap of what was covered in this lesson. Project management is the application of knowledge, skills, and tools and techniques applied to project activities to meet the project requirements. PMO provides the policies, methodologies, and tools and templates for managing projects within the organization. Project manager has to integrate various project aspects, like the people, stakeholders, risks, communication, and procurements with the project constraints, time, scope, cost, and quality. Identifying internal and external stakeholders, determining their requirements, and communicating with them regularly is an important role of a project manager. Functional, projectized, and matrix are the three types of organization structures based on the level of authority given to the project manager. Project lifecycle spans the initiation of a project until the closure, while product lifecycle also encompasses the operational and maintenance phases.
If getting your learning started is half the battle, what if you could do that for free? Visit SkillUp by Simplilearn. Click on the link in the description to know more.
In this lesson, we will focus on project communications management. Let us begin with the objectives of this lesson. After completing this lesson, you will be able to define communication and project communications management, identify the different communication methods, technology, and channels, explain the elements of a basic communication model, describe the project communications management processes. In the next screen, let us take a quick look at the project management process map. There are 47 processes in project management grouped into 10 knowledge areas and mapped into 5 process groups. In this lesson, we will look at the 7th knowledge area, that is, project communications management and its processes. In the next screen, let us understand communication. Communication can be best defined as a two-way process of exchanging information between two entities. As you can see on the screen, if project is an entity, the project needs to communicate with other entities in the organization, like project managers, senior management of the organization, and any other stakeholder of the project. Similarly, These entities may also have to communicate with the projects. The communication between project and the stakeholders is always two-sided. Project Manager is responsible for ensuring proper communication to and from the project. In fact, a project manager spends almost 90% of his or her time on communication. You can now understand how important it is for a project manager to plan this activity well. In the next screen, let us discuss communication methods. Communication can be done in two ways. It can be done written or verbal. Both written as well as verbal communication can either be formal or informal. Formal means communicating by following some basic rules, whereas informal means taking a casual approach. These two combinations result in 4 different communication methods. They are formal written, formal verbal, informal written, and informal verbal. Formal written method is used for project management plans, project charter, and over long-distance communication. Formal verbal method is used during presentations, whereas informal written method is applicable while writing notes or emails. Informal verbal, on the other hand, is applied during conversations. You can expect questions in the PMP exam which require choosing a communication method for a given situation, so a fair understanding of the communication methods can help you score higher. In the next screen, let us look at the various communication technologies. Communication technology refers to the different media used for communicating. A few such technologies are listed on screen, among which email, fax, and telephone are a few popular communication technologies. In the next screen, let us understand the communication channel with the help of an example. Communication takes place between 4 people in a team. The lines across the members represent there can be 6 unique channels of communication existing within the team. Now, if the team comprises 10 members, how many unique channels of communication will be calculated? You can use the formula n multiplied with n minus 1 and the resulting sum divided by 2. N is the total number of people involved in communication. In this case, n equals to 10. If this is put into the formula, you will get 45 as the result. Therefore, 45 unique communication channels exist in a team of 10 people. It is difficult to manage such a large number of communication channels. Therefore, it is important to structure communication. Otherwise, everyone starts communicating everything to everyone, and it can become a real chaos in the project. In the PMP exam, you may be asked to calculate the number of communication channels in a scenario-based question, so please make a note of the formula to answer the question correctly. In the next screen, let us discuss the basic communication model. Project communications management includes the processes required to ensure that information about timely and appropriate generation, collection, distribution, storage, and ultimate disposition of project is prepared and circulated to all project stakeholders. It is the responsibility of a project manager to ensure that the information requested by the stakeholder is communicated to them. The frequency at which the information needs to be shared may also vary from stakeholder to stakeholder. For example, think about a simple process of sharing a project status report with the customer and senior management. This knowledge area explains how it should be done as per PMI. In the next screen, let us discuss the project communications management processes. There are 3 project communications management processes. Process is carried during different process groups. Plan communication management is done during planning process group. Manage communications is done during executing process group. And control communications is done during monitoring and controlling process group. In the next few screens, we will cover each of these processes in detail. Plan communications management is the process of developing an appropriate approach and plan for project communications based on stakeholders' information needs and requirements and available organizational assets. This belongs to the planning process group. Stakeholder Register is an important input to this process. It is a list of all the stakeholders. The project management plan has information about a large number of the project's requirements and the stakeholders who need to receive communication of various kinds are therefore a critical input to this process. In addition to these two, organization process assets and enterprise environmental factors are also inputs to this process. Many organizations have standard templates to prepare communication management plan, which are part of the organizational process assets and enterprise environmental factors. The first technique used in this process is the communication requirements analysis, where the communication requirements of each of the stakeholders are analyzed and categorized. In this, you try to find how many of the stakeholders need similar kind of information, which can be grouped together. If you send information through an email system, all those stakeholders who need similar information can be marked in CC in the email. Next, you can decide on the communication technology. These days, email is the most widely used technology, but in few cases, you might have to send information using some other technology, like fax or registered post. For example, all government communications are done using registered post to keep a written record. Finally, you need to understand how communication really happens. That is, the communication models and the various communication methods used. You may need to conduct meetings before agreeing on and finalizing the Communications Management Plan. The Communications Management Plan is the primary output of this process, which lays down the procedures around communications in the organization. Communication Management Plan has information like which stakeholder needs what kind of information, at what frequency, and how. As a result of this process, some other project documents may also get updated. There may be questions in the PMP exam based on the Plan Communications Management process, so a fair understanding of the process will help you answer such questions correctly. In the next screen, let us look into a business scenario to understand this concept better. After reading the problem statement, click the Solution button to look at a possible answer. Managed communications is the process of creating, collecting, distributing, storing, retrieving, and the ultimate disposition of project information in accordance to the Communications Management Plan. It belongs to the Executing Process Group. Managed communications is done throughout the project lifecycle. Everything cannot be planned during communication planning, so managed communications takes care of responding to unexpected requests for information as well. Communications Management Plan is an important input. Work performance reports have information regarding project performance and status information. Organizational process assets are the standard templates created for the status report by organizations. In some organizations, there are guidelines for communication distribution. Enterprise environmental factors are the other inputs to this process. Various tools and techniques are used in this process. Communications technology represents the means of technology, that is, email, instant messaging, telephone conferencing, etc., that are used to exchange information. The use of communication models helps you determine the technique that is best suited for a particular situation. Communication methods are the various methods used to communicate. For example, whether it is interactive or offline, whether information is being pushed by the provider or pulled by the recipient, etc. Information management systems help design a framework for managing the information within a project. That is, how it is acquired, where it is stored, and how it is distributed and destroyed. In performance reporting, all the information is synthesized in the form of performance reports that are later distributed to the appropriate stakeholders and forms an important part of the communications strategy on a project. The first and primary output of this process is the communications messages that are generated during the project. The other outputs include project management plan updates, project document updates, and organizational process assets updates. In the next screen, let us discuss control communications process. Control communications is the process of monitoring and controlling communications throughout the entire project lifecycle to ensure the information needs of the project stakeholders are met. It is part of the monitoring and controlling process group. The inputs to this process are the project communications, project management plan, and issue log, which has a list of issues that are raised by different project stakeholders, data related to the work being performed on the project, and various other project documents which may have to be communicated. Other inputs include work performance data and organizational process assets. Let us look at the tools and techniques in detail. The information management systems provide tools to collect, consolidate, and present the information in the form of cogent, concise communications. Expertise must be sought from different stakeholders on how you should go about this process. Several meetings may be needed to ensure the efficiency and efficacy of the communications. The major outputs of this process is the work performance information, which indicates that the work performance data has been analyzed, interpreted, and presented in an easily comprehensible form. This process may also give rise to change requests, updates to the project management plan, project documents, and organizational process assets. In the next screen, let us look into a business scenario to understand this concept better. After reading the problem statement, click the Solution button to look at a possible answer. Here is a quick recap of what was covered in this lesson. Communication is a two-way process of transferring information from one entity to another. The four commonly used communication methods are formal written, formal verbal, informal written, and informal verbal. The total number of unique channel of communication can be calculated using the formula n multiplied with n-1 and the resulting sum divided by 2. By analyzing the communication model, problems in project communication can be identified. Project Manager is responsible for timely availability of information to all stakeholders. The three project communications management processes are Plan Communication Management, Management Communications, and Control Communications. In this lesson, we will focus on Project Human Resource Management. There are 47 processes in project management, grouped into 10 knowledge areas and mapped to 5 process groups. In this lesson, we will look at the 6th knowledge area, that is, Project Human Resource Management and its processes. In the next screen, let us understand Project Human Resource Management. Project Human Resource Management includes the processes that organize, manage, and lead the project team. One of the key elements of human resource management is that each of the project team members should have clear assignment of their roles and responsibilities. In addition, even the team working on project management tasks should be a part of the project team, and they are responsible for project management functions like initiating, planning, executing, monitoring and controlling, and closing, along with other leadership activities. In the next screen, let us understand the difference between functional and project manager. An organization may have both functional managers and project managers. The difference: functional manager is the one who handles a business function or department. For instance, the HR manager is responsible for the HR department in an organization. Therefore, an HR manager will be a functional manager. Generally, a functional manager is also a subject matter expert. The roles and responsibilities of the functional manager depend upon the core business of the organization and overall organization structure. Functional managers normally own the resources and provide the projects with necessary resources. They also negotiate with the project manager regarding resources. The project manager, on the other hand, is responsible and accountable for the success or failure of a project and the quality of the project. They are not technical experts. The project manager may not have authority over the resources, depending upon the organizational structure. They often have to negotiate with the functional manager for the resources and are responsible for the product quality. A project manager will credit the team with the success of the project and accept the blame for the failure. Now let us look at an example to understand the roles played by functional and project managers. The CEO of an organization initiates a new project to secure an ISO 9001-2008 certification for the company. Now this project would require team members from each of the company departments, and whoever is the project manager of this project will have to request the functional manager to assign one of their team members to the project. Resources assigned to the project go back to their respective departments once the project is completed. Let us now discuss the project human resource management processes in the next screen. There are 4 project human resource management processes. The first process, Plan Human Resource Management, is done as part of the planning process group. The next 3 processes are part of the executing process group. These processes are Acquire Project Team, Develop Project Team, and Manage Project Team. Let us now look into each of these processes in detail. In the next screen, let us begin with Plan Human Resource Management. Plan Human Resource Management is the process of identifying and documenting project roles, responsibilities, required skills, reporting relationships, and creating a staffing management plan. This process is part of the planning process group. In addition to that, finalizing the project hierarchy of who reports to whom and designing the staffing management plan is also part of this process. The first input to this process is the project management plan. There could be a lot of information in the project management plan and subsidiary plans that may be relevant to the creation of the human resource management plan. For example, the project lifecycle processes, the timelines, how the work will be accomplished, etc. The other key input for this process is the activity resource requirement. Team members can be identified based on these requirements. In addition to this, enterprise environmental factors like current employment outlook, etc., are also important. For example, if the economy is booming and there are ample job opportunities for the team members, the reward and recognition system can keep the project team interested in the project. Organizational process asset is also an input to this process. An example of the organization process assets can be template or a form to request for a new resource. Let us now look at the tools and techniques used to develop human resource plan. The roles and responsibilities are captured in the form of organization charts and position descriptions. There are various ways to draw this chart. It can be either hierarchical chart, which shows the reporting function, or it can be text-based. The other technique used for developing the human resource plan is networking. This involves formal or informal interactions within the organization and outside by the project manager to identify the best team for the project depending upon various interpersonal factors. Organizational theory helps to understand how individuals come together and function as an organization. Expert judgment and meetings are required to put the human resource plan together. The output of this process is Human Resource Management Plan. This plan contains documents like Staffing Management Plan, Project Organization Chart, and Roles and Responsibilities Matrix. The Staffing Management Plan is a comprehensive document that describes when and how team members would be added to and released from the project. Another component of the Staffing Management Plan is the Recognition and Reward System. Recognition and Reward System helps project managers motivate their team. The Staffing Management Plan is relevant to the projects of a functional or matrix organization where project team members are always caught in a dilemma about prioritizing project work against regular departmental work. In the next screen, let us discuss organization charts and role descriptions. A project manager needs to make sure that there is an organization chart prepared specifically for the project. It should clearly identify the roles and the reporting relationships between them. A sample organization chart is shown on the slide. Another way of clearly delineating responsibilities among team members is by using a responsibility assignment matrix. One form of responsibility assignment matrix is the RACI chart. In the RACI chart, R stands for responsible, A for accountable, C for concerned or consulted, and I for informed. For each important activity or deliverable on the project, it needs to be clearly identified who is responsible or contributes to it, who is ultimately accountable, who is merely concerned about the success, and who needs to be informed or kept in the loop. An example of the RACI chart is shown on the screen. In this case, Project Manager John is accountable for the project plan, and the other team members, Chris, Sally, and Ting, are responsible for completing the plan. Similarly, you can note the roles of each resource in the other activities. In the next screen, let us understand Resource Histogram. Resource histogram is a method of depicting how many resources are required for the life of a project. If you observe the chart shown on the screen, it indicates that the number of staff hours required on the project increases to a peak in 2014 and then slowly tapers off. Especially for long-running projects, the level of staffing needed may vary considerably over a period. This has implications for other parts of the plan as well. For example, the cost will vary as the number of resources change. This piece of information helps a project manager to understand at what time they need to onboard and offboard resources on a project. In the next screen, let us look into the second human resource management process, that is, Acquire Project Team. Acquire Project Team is the process of confirming human resource availability and obtaining the team necessary to complete project activities. This process belongs to the Executing Process Group. Acquiring resources may not be required in the planning phase. Therefore, it is done in execution phase. Though you may plan to acquire few in the planning phase, major acquisition is done in execution phase. This may be true where large projects are run spanning over many years with several detailed activities. The key input is the Human Resource Management Plan. Enterprise environmental factors help understand which team members will be available to work on the project, how much they will cost, etc. Organizational process assets will help understand the hiring procedure of the company, the policies that govern the use of team members on the project, etc. The key technique for acquiring the project team is negotiation. As a project manager, you have to negotiate with the company's senior management, resource manager, or with prospective candidates to secure the most suitable resources on the project. Sometimes the resources may be pre-assigned to a project. This typically happens when they are the key resources, without which the project cannot take off. Sometimes the project team is acquired by getting required resources through external vendors. Most of the bigger organizations have approved a list of vendors who provide resources on a contractual basis. Nowadays, the concept of virtual team is also quite popular to get a project team. So even though the project is being conceived in one country, a big part of the team can be in another country. For example, if the project is conceived in the USA, majority of the team can be in Germany, and both the teams can coordinate over the phone, email, chat, etc. Multi-criteria decision analysis is also an important tool to achieve the objectives. While acquiring the human resources for the project, it is important to consider a number of factors, such as availability, cost, skill set, experience, attitude, relocation needs, etc. These criteria have to be considered in totality and balanced out against the project's requirements. The output of this process is project staff assignments, resource calendars, and updates on project management plan. Let us now discuss the next process, develop project team. Once the project team is acquired, the next step is developing the project team. Develop Project Team is the process of improving competencies, team member interaction, and overall team environment to enhance project performance. This process belongs to the Executing Process Group. The inputs to this process include project staff assignments, resource calendars, and human resource management plan. One of the techniques used in developing Project Team is interpersonal skills. It is more of an art than a science, and this is where individual characteristics of project managers matter a lot. If the project manager genuinely commands trust and respects the team members, developing the team becomes easy. Team members look up to the project manager not only for getting project-specific instructions, but also for their career advancement as well. Social activities like celebrating a team member's birthday, going for parties outside the office, etc., helps in team building. Training is also an important tool for developing the project team, as it helps in increasing the knowledge of competencies of the team members. Sometimes, co-locating the team members at a single place also helps in developing team bonding. This is especially important if team members work from different geographical locations. Knowing a person face-to-face does help in reducing conflict. Project managers can also encourage the team members by providing recognition and rewards. Personnel assessment tools give the project manager insights into the strengths and opportunities for improvement in the team members. These tools also help in understanding members' aspirations so that the project manager can better align the project goals with the individual aspirations. Finally, the project manager should also set some ground rules in the project to ensure that team performs their work without any problems. Some such rules can be: everyone should reach office for daily meeting by 9:30 a.m. sharp. If there is more than a 10% delay in completing any activity assigned, it should immediately be escalated to project manager. If there are any unforeseen circumstances, it should be immediately brought to the notice of the project manager, etc. The output of this process is team performance assessments. This is done by the project manager to evaluate and enhance the effectiveness of the team as a whole. This is a document which explains team effectiveness. As information about the team evolves, the enterprise environmental factors may also be updated. Questions that test a project manager's role in developing a project team can be expected in the PMP exam, so ensure that you have a fair understanding of the role before you take the exam. In the next screen, let us discuss the Manage Project Team process. Managing the project team is different from developing the project team, though it is also done during the Execution Process Group. It relates to measuring team members' performance, providing feedback, resolving issues, and managing changes to optimize project performance. To measure team members' performance, the manager should know the work assigned to them as well as their performance on the assigned work. Hence, project staff assignments and team performance assessments are listed as input to this process. The Human Resource Management Plan serves as a guideline for managing project teams. Some organizations have templates and procedures to do such assessment, and that being the reason why Organization Process Asset is also one of the inputs to this process. The work performance reports, as well as issue logs, will be inputs because the team management activities have to be performed in this context. Observation and conversation is a technique where the project manager monitors and discusses the tasks done by the team. This does not imply formal project status reports, but having an informal interaction with the team before documenting the project status report. Knowing about the issue early helps in resolving them early. Formal performance appraisals are helpful in evaluating the team members' performance on the project. The project manager creates these with the help of the team supervisors. It is an established practice in most organizations to evaluate team members for their work. This may have a bearing on their future assignments, salary, promotions, etc. Since the power of appraising lies within the project manager, the project manager can use this as an effective tool for managing the team. Since multiple resources work on a single project, it is quite natural to expect conflicts. It is the responsibility of project manager to resolve conflicts.
Conflict management has been discussed in detail later in the lesson. You can expect questions on conflict management in the exam. The other tool is interpersonal skills. The output of managing a project team includes corrective action recommendations, like which team members to be changed, implementing some reward system to motivate the team, etc. Updating the project management plans, documents, organization, process asset, and enterprise environmental factors are the other outputs of this process.
There can be questions in the PMP exam that test a project manager's skill in managing a project team. So ensure that you are aware of the inputs, tools and techniques, and outputs of managing a project team.
Let us discuss team dynamics in the next screen. Any team naturally goes through several stages as it gets together. These stages are forming, storming, norming, performing, and adjourning. In forming stage, a team formally comes together for the first time. In storming stage, disagreements start to surface. This is followed by norming, when the teams start working together and trusting each other. In performing stage, they are able to deliver results as a team. Finally, the team is adjourned when the work of the project is completed or the project is terminated. In the next screen, let us discuss conflict management.
Many organizations look for people with diverse background to get different perspectives about work. If people with diverse backgrounds and culture work on a project, it is quite natural to expect conflict. Conflict often results in opportunities for improvement. The root causes of conflict can be scarce resources, scheduling priorities, and personal work styles. While the popular belief is that personality or ego can be the key reason for conflict, it is the least possible reason for conflict. As a project manager, if you find yourself in between a conflict with a team member, sit across the table and resolve it. If not, they should get their immediate managers involved and try to resolve it. To avoid conflicts, a project manager should let everyone involved have complete clarity about the project. Assign the roles and responsibilities to each of the team members clearly. Ensure that there are no overlapping responsibilities, which could be a possible cause for conflict. Sometimes boredom at work can also lead to conflict. So one of the responsibilities of project manager is to keep motivating the team members and let them work on interesting and challenging assignments. Business scenarios-based questions on conflict management can be expected in the PMP exam, so it is essential to have a fair understanding of the topic. In the next screen, let us look at conflict resolution techniques. There are 5 techniques of resolving conflict. They are withdraw or avoid, smooth or accommodate, compromise or reconcile, force or direct, collaborate, or problem solve. In withdraw or avoid, one retreats from a potential conflict situation or defers the resolution to a later date. This does not resolve the conflict, but allows for more time. In smooth or accommodate, areas of agreement are emphasized to reduce the intensity of the conflict. Again, this does not on its own result in a resolution, but it may succeed in changing the perceptions about the situation. In compromise or reconcile, there is some give and take in order to bring some satisfaction to all parties. Depending on how the process went, this may be perceived as a win-win or a lose-lose situation, because none of the parties really get what they want. In force or direct, a person in a position of authority directs how the matter should be resolved. It may be necessary to do this when the matter has to be resolved immediately. However, this may result in upsetting one or more of the conflicting parties. In collaborate or problem solving, the parties in the conflict are asked to come together to collaborate and look for a resolution to the problem. This offers the greatest likelihood of a satisfactory and permanent resolution, and should be resorted to whenever possible. Business scenario-based problems, where a resolution technique has to be selected, can be expected in the PMP exam. So understanding the conflict resolution techniques is essential. In the next screen, let us look into a business scenario to understand this concept better. After reading the problem statement, click the Solution button to look at a possible answer. One of the key responsibilities of a project manager is to get work done by the team. There are certain powers that a project manager can use to get the work done. A project manager has to use a combination of techniques to get this accomplished. Various powers of a project manager are legitimate or formal, reward, penalty, expert, and referent. In legitimate or formal, project manager can formally assign a work to a team member that he or she has to do. Project manager can reward and recognize the team members. The reward could be as simple as assigning challenging or sought-after work to a team member. This can motivate good performers on the project. Sometimes project manager can penalize the team members for poor performance. Some project managers are able to command authority because of their expertise in a certain field. Project manager can be considered as a reference of higher authority to get the work done. Sometimes referent authority also arises from the personal charm or charisma of the project manager. Legitimate, reward, and penalty are the powers derived from the project manager's position in the company. Expert power exists when the project manager is an expert on the subject matter. Reward and expert are usually the best forms of authority to use. Penalty is the worst way of influencing and managing the team. A project manager should resort to this only as a last option. Regardless of the project manager having formal reporting authority over the team, they are naturally looked upon as the leaders for their projects. Project managers need to be familiar with the leadership styles and be able to tailor their style according to the needs of the project and that of the team. There are 3 leadership styles. The first one is authoritarian or autocratic. In this style, the leader sets clear expectations of the team and expects complete compliance. In a participative or democratic style, the leader offers guidance but also involves the team in decision-making. In a delegative or laissez-faire style, the leader leaves the work to the team without offering much guidance. In most circumstances, you would want your leader to employ a participative style, but there may be occasions when other styles might be appropriate. In the next screen, let us discuss McKinsey's 7S framework. A popular framework in management science is the McKinsey's 7S framework. There are 7 elements that are divided into 2 categories. An organization working on a project will have these elements already in place, and hence these become the hard elements. The first 3 elements of the 7S framework are the strategy, structure, and systems. The leader or project manager is expected to step in and exhibit soft elements to earn the mantle of leadership. The next 4 elements are shared values, skills, style, and staff. There are 47 processes in project management, grouped into 10 knowledge areas and mapped to 5 process groups. In this lesson, we will look at the 8th knowledge area, that is, project risk management and its processes. Risk is an uncertain event or condition that can affect a project positively or negatively. Although most of the time you view this uncertainty as bad, sometimes it also has a likely positive outcome. Let us look at an example of risk having a positive outcome. You are using a software for managing timesheet of your team members. Due to budget constraints, you are forced to use a new software. Though you were initially reluctant to use it, you found the new software to do better than the current one. It is more efficient and has better reporting facility. An example of bad uncertainty can be swine flu. Government declares mandatory holiday to check flu spread, which may affect your project work. Risks can be managed only if they are measured quantitatively. Suppose there are many risks identified in a project and you have limited resources to manage them. You should know which risk is most important that has to be managed first. Therefore, measuring risk becomes very critical. Risk is measured by assigning a monetary value to it, and that value is arrived at by multiplying the probability and impact of the risk. Risk can be categorized in various ways. One such categorization is external, internal, technical, or project management-related risk. External risk arises out of external policies or regulations. For example, government policy that the river water can be used for drinking purposes may hinder your production, which is dependent on the river water. Internal risk arises from within the project. For example, the complexity of the work may result in time and cost escalation. Technical risks arise from the technology being used. Projects in space exploration have a lot of technical complexity. Risks could be related to project management. For example, if there are many interdependencies between the sub-projects, it is a risk from the project management standpoint. The categorization of risk can be based on the origin. Risks can be classified as scope risk, resource risk, schedule risk, cost risk, and quality risk. Scope risk can include redoing the same task if the scope is not well understood. When the only resource is assigned to some other project, it is called resource risk. A decision tree helps in analyzing risk and its impact on making decisions in a scenario where there is uncertainty on the outcome. Suppose you want to buy a car. You can buy either a new car or an old car. Which one should you buy? Which has more risk over a period of 5 years? Consider the concept of decision tree to solve this problem. The initial cost of buying a new car is $20,000, and the cost of buying an old car is $15,000. For a new car, the probability of it having any problem, fail scenario, is only 10%. That is, there is a 90% likelihood that it will just work without any problems, pass scenario, and if it does have any at all, the impact of the problem is $15,000. The reason is that it was bought at a higher cost. An old car has 70% probability of having a problem. The reason being the probability is high because the car was already used by someone else in the past. However, the impact here is low, say $10,000. If you add probability multiplied by impact of both the options at the decision nodes, you will find buying an old car over a period more risky than buying a new car. The project cost will be arrived at after considering the risk reserves of both the known risks and unknown risks. There is a specific order in which these reserves are calculated in the project cost. First, the cost of all activities is identified. Activities are the smallest, unique project tasks. All the activity costs add up to the cost of the work packages. Work packages are the last level of classification in a work breakdown structure. Work packages cost adds up to the control account cost. One or more work packages are clubbed together to create a control account and manage the cost of the work packages. Next, the project costs are identified. There can be multiple control accounts in a project. Now, once the project cost is calculated, some reserve is added to take care of any uncertainties. You may have made some assumptions to calculate the cost of the activities, and by adding some reserve, you would want to take care of those uncertainties. In this case, make a note that you are accounting for the assumptions made, and it can be said that this reserve takes care of known uncertainties. This reserve is also called contingency reserve. At this point, you have arrived at the cost baseline. That is, the cost for the project that will be used for budgeting and tracking purposes. Once the planned cost is arrived, there is another reserve that gets added, called management reserve. Note that management reserves are not part of the cost baseline and are used during emergencies only. By adding contingency reserve, you have taken care of known uncertainties, and by adding management reserve, you take care of unknown uncertainties. That is, those risks that perhaps have not yet been identified. Unknown uncertainties are added based on experience or expert judgment. Project risk management includes the processes of conducting risk management planning, identification, analysis, response planning, and controlling risk on a project. The key objective of risk management is to increase the probability and/or impact of positive events and decrease the probability and/or impact of negative events. There are 6 risk management processes. Plan risk management, identify risks, perform qualitative risk analysis, perform quantitative risk analysis, and plan risk responses belong to the project planning group, and control risks belong to the monitoring and controlling process group. In this lesson, we will focus on project stakeholder management. There are 47 processes in project management grouped into 10 knowledge areas, and mapped to 5 process groups. In this lesson, we will look at the 10th knowledge area, that is, project stakeholder management and its processes. In the next screen, let us understand who stakeholders are. A stakeholder is anybody who has a stake in the project. A stakeholder may be an individual, a group, or an organization who may affect or be affected by or perceived to be affected by a decision, activity, or outcome of a project. Further, the nature of the impact can be positive or negative, thus giving rise to the notion of positive or negative stakeholders. Irrespective of whether a stakeholder is positive or negative, it is important to engage with the stakeholders and get them involved in the project. This can make a critical difference to the success or failure of the project. A single disgruntled stakeholder can bring the entire project to its knees, whereas an actively engaged and influential stakeholder can have the opposite effect. Let us understand who the common stakeholders of a project are. There are several categorizations of stakeholders. The project managers themselves are important stakeholders. The project team members represent stakeholders in the project. The senior management of the organization, which is working on the project, has a stake in the project. The sponsor, that is, the person or entity that provides the money and resources for the project and essentially champions the project, is an important stakeholder. The customer, which may be different from the sponsor, is a stakeholder as well. For instance, in many of the projects in the social sector, the sponsor may be the government or a development agency, whereas the customers would be the people who actually benefit from it. The end users, which may be different from the customers or the sponsors, are stakeholders too. The vendors or suppliers who provide goods or services to the project are important stakeholders. People whose lives may be impacted by the output of the project are also stakeholders. For example, if a highway project requires possession of privately owned land, people whose land is being taken away are the stakeholders. If the construction of a dam or water reservoir benefits the downstream farming communities, they are the stakeholders here. Competitors who provide alternative goods or services are stakeholders too. Sometimes environmentalists or other social groups may become stakeholders. The government or political leadership may become stakeholders for projects in the public domain. It is sufficient to state that there could potentially be hundreds of stakeholders for a large project. It is in the interest of the project manager and the project team to clearly identify all such stakeholders up front and then actively manage them throughout the project. In the next screen, let us discuss the classification models for stakeholder analysis. Not all the stakeholders have the same amount of influence or power over the project. Therefore, the way to manage each stakeholder needs to be calibrated based on a proper classification of the stakeholders. This is the role of the classification model. You can come up with a grid that maps the power of the stakeholders, the interest they have, the influence they may have, or the impact that they can have on the project through the power interest, power influence, or influence impact grids. It can be represented by mapping stakeholders to a power or interest grid. The diagram on the screen has x-axis, which represents interest level, and y-axis, which represents the power level. Based on the various combinations of power levels and interest levels, the grid can be divided into 4 quadrants. The stakeholders on the top right quadrant, with high power and high interest, need to be managed closely. That is, you have to monitor their involvement and engagement very closely. The stakeholders on the bottom right quadrant, with high interest but low power, need to be kept in the loop. That is, you should share information with them and keep them regularly informed. The stakeholders on the top left quadrant, with high power but low interest, can be managed by keeping them happy, for example, by making sure that their interests and opinions are taken into consideration. The stakeholders on the left bottom quadrant, with low power and low interest, may be managed less actively by simply monitoring how things are going with them. The salience model describes classes of stakeholders based on their power, ability to impose their will, urgency, need for